Good afternoon, everybody. It's TK from ReadySetFutures.com. Today is the 25th of September 2016, and this is our first weekly wrap-up for the week beginning 19 September 2016. That is the way it's going to run, guys. We're going to talk about performance on the week, both from a trading perspective and from a channel perspective. We're also going to then look at a series of charts called our weekly chart pack, and these are going to be the instruments that we look at every day: copper, gold, crude, and the E-mini. We're going to take a bigger picture perspective, take a little time out for that, and we're going to take a look at the weekly charts and see what we can see. Then we're going to move on over to the commitment of trader index, and I can walk you guys through what I see from a commitment of trader report analysis, and see how that pairs off with what the charts are telling us. The objective of the weekly review for me is to maintain perspective, to get away from the day-to-day, take a step back, and see what the markets are doing from a longer-term perspective. I don't like to get sucked into the minutia on a daily basis. It's really tempting. And the weekly review for me helps to broaden my perspective, helps me to maintain a perspective during the week so that I can pick the appropriate spots. And with that, why don't we get it started? Okay, guys, so this is the first section of the weekly review. We're going to talk about performance. And everybody wants to talk about trading performance. I'm sure I do. Unfortunately, I've got little to report today. I had family in town over the weekend. We were out, we were doing stuff. And so, in my life, family plays a very important role. And so when they were here, I wasn't trading. That said, in addition, we had the Federal Reserve and the Bank of Japan with their, kind of tandem announcements on Wednesday. So I also chose to sit that period of time out. I have traded through these announcements before. I don't like to do it. So again, I chose not to trade. I chose to sit on the sidelines. After the announcements, though, I maintained my short kind of bias in the markets that I'm trading, specifically right now, focused on, copper, gold, crude, and the E-mini S&P 500. When I see good opportunities, I like to take them depending on the market. Right now, I'm certainly focused on the E-mini. I like E-mini short. I've been attempting to get into the market short. I missed two entries. On Thursday, one was actually one tick away, and Friday it was 2 ticks away. So both unfortunate. Both certainly unfortunate, but I'm going to keep trying. We're going to keep plugging away. As we get into some of the charts, I'll show you why I feel the E-mini is still, good on the short side. That said, from a channel perspective, it was also another good week. I was able to get up a market wrap up for you guys every day out of the week. I believe on Wednesday or Tuesday, I missed the evening and was able to get it up for you first thing in the morning before the market opened. This week, my goal is to get that up for you after every market close. We also did our first book review. We reviewed Trading Stocks and Commodities with the Insiders, Secrets of the COT report from Larry Williams. Please leave me some comments. Check that video out. Drop me some comments. Throw down a thumbs up if you like it. And we also stopped doing the pre-market wrap up or the pre-market preview out here on the West Coast. For me to get that out where it may be relevant for you guys out east, I'd have to get up probably about 2 a.m., 3 a.m. to do that, and that's just a little too early for me. So it seemed to be kind of a waste. Not a whole lot of value there. So that's from a channel perspective. Overall, I would say a good week on the channel perspective. from a trading perspective, kind of disappointing. I did follow my system. I was honorable to my system, and I maintained discipline from that regard, which is a great thing. Unfortunately, I didn't get into the market when I wanted to, and for that reason, a bit disappointing. But I like to judge myself on process. Am I following a process? Did I follow the right process, and did I follow my process? And this week I did. So overall, a good week. Moving over to charts, as I said at the beginning, we're going to go through each of our instruments that we look at a daily basis, and we're going to take a peek at the weekly chart and just kind of see what the action is. Then we're going to move over to the COT index, looking at the Wilco oscillator that we learned about in our book review, and see how that marries up. What you're looking at here, guys, is a chart of copper, the weekly chart of copper. As you can see, we've talked about this during the week too. Copper has been range bound now for about a year. If we extend that beyond, into 2014, you can see this is just the kind of commodities, the general commodity sector falling apart, if you will. And as I said, we've kind of come down here to a bottom, and we've traded in a range. A couple weeks ago, we noted that we were down here at the bottom of the range, and our initial assessment was that we were likely to stay there and potentially fall further. As I said, we were proven wrong in that regard, and we see price moving higher. Question is it going to continue at that? It's right in the middle of its trading range. And so, you could take this thing long or short. The short-term move may be on the long side, maybe a bullish move. But I'm going to show you later on the COT report, the longer-term perspective is bearish. So, copper for me right now is a neutral call. Taking over to gold. Here we go. Here's gold. So, here's the lows back in December. As we talked about, gold has, formed a consolidation base and then moved up to another consolidation zone, and it has since moved up. And now we're into another consolidation zone. The question is, are we going to continue higher or are we going lower? In the near term, and it depends on what your perspective is, what your horizon is, your time frame. Gold looks like it's going to fall shorter. We're coming into a pretty typical flag pattern, and a lot of cases say it's going to continue on in the direction that it came into the flag pattern from. In this case, I see this as a consolidation zone. COT report supports that, and I'll show you that a little later. And so, I do believe we could see gold lower before it's higher. The 1320 area it's definitely going to act as support. As you can see, it has really since July. That 1320 area has been a tough one for the bears anyway to overcome. You can see some of these Fibonacci retracements that I have up here on the side. These are the ones that we've looked at every day, and I wouldn't be surprised to see a sell-off down here into the 1280, 1290 range before we move higher in gold. But from a weekly perspective, it certainly supports our conclusion that we're consolidating. You see the downward sloping trend line that I have drawn here, just to kind of show that there is a bearish bias in the market. But again, I believe that that's from the near-term perspective. Heading over to crude. Again, this is our weekly chart on crude. And, crude is an interesting instrument. I don't know how closely you guys follow crude or how closely you guys follow the news when it comes to oil and OPEC. And I have to say, this has been a tough instrument if you're a trader, at least a longer term trader. The amount of false rumors that come out in the media on crude about production cuts, about countries undercutting each other in the market, and what their true motives are in the marketplace are really it's almost unbelievable how every day it seems there is just a new rumor on crude and production cuts and things like that. Just last week the whole thing was Saudi Arabia and Iran. There was a kind of a, if you do this, I'll do that type of agreement at least being discussed. Iran said, no, we want market share. Saudi said, okay, we won't cut. Earlier today, I was reading some of the news articles, and I find, Saudi Arabia has said that they're willing to cut 500,000 barrels a day just right off the muscle as a matter of goodwill. Who knows? Who knows if that has any real merit to it? I do know the Saudi economy is based on oil revenue and subsidies of from oil production. With oil priced as low as it is, clearly there is less revenue, and it's only a matter of time before the coffers run dry. Are they feeling pressure to cut and to kind of take a first step forward in reducing supply worldwide? I don't know. We'll see. I believe it's this week. There's a meeting in Algiers where OPEC is going to discuss production volumes as they do quarterly. So when we look at the chart on crude, you can see here I got a number of trend lines. I do feel short on crude, although I'll be honest with you, COT report does not support short on crude, and I'll show you why. But for us, at least for my own opinion, I do feel crude is taken on a short bias. You can see we've come down. We're still in a downward sloping trend. So I think that the larger trend here is short, though. Productive capacity, the merchants, the commercial interests are beginning to move off of their kind of historic short position. Headed over to the ES, the E-mini S&P 500. I'm just scrolling out here so that you guys can see just the incredible run up that the ES has, and we are all-time highs, right? Just nosebleed heights. So scrolling back in, I like this, this trading range I think is prescient here down to 1800, 2080, 2090 down to 1800. We had a glimpse of this earlier in the week, ahead of the Federal Reserve Bank and the Bank of Japan announcements. Volatility is coming back, and we're going to look at the VIX a little bit later from a COT report perspective, because that has a direct implication as to what the ES does. Interestingly enough, right, you can see this bar here, right? We're down prior to the announcements, and then it's just a panic buy up. The volume point of control certainly acted as a point of resistance. And, as you can see here, there's that 70% retracement where we're still kind of trading around. As I said, interestingly enough, there's not much behind that rally. We sold off both Thursday and Friday. And, I know there's certainly some prominent economists that feel the ES is headed higher. I'm not so sure, especially if the VIX continues its march higher. So, for me, I'm a bit bearish on the ES, although that's probably an unpopular position. I see 2180. I'd love to short off at 2180. I don't think we're going to get up there. I was attempting to short this week off of 2173, and then again on Friday at 2170. And in both cases, as I said at the beginning of this, just kind of missed me a bit. So that's our chart pack, fellas. And now we're going to head over to the Commitment of Trader report and the Commitment of Trader report oscillator. So we're going to go in the same order that we looked at for the chart. So first up here, well, let me give you a bit of an orientation here. So these three lines, you see three lines on the chart. We have a gray line, a blue line, and an orange line. The blue line is our commercial interests. The orange line, managed money interests, speculators, large speculators. And the gray line is the public. Those are the three that I tend to look at. Larry's premise in the book is that we wants to follow the merchants. So as we talked about in copper early, it's kind of a neutral market. You can see right here, these guys are smack in the middle, but they're heading downward. And this is a 3-year chart. It's normalized to 3 years, and this is normalized here to 6 months. And so you can see a bit more clearly, we're starting to see a downtrend in our commercial interests on copper. And so, that kind of supports what we looked at from the chart. From a neutral perspective, as you can see here, we're just really kind of stuck in the middle, 0.4 to 0.6. It's not a whole lot of strong bias one way or the other, but trending downward. Heading over to gold. Gold, for, again, same lines, same meaning. Blue is our commercial interest. The gray is the public. And the orange line here is our large speculators and non-commercial reportable positions. And you can see our commercial guys are starting to get off of an extremely low position. Again, this is a normalized to 3 years of data. And you can see a fairly significant move down. And now we're starting to trade higher. And this kind of supports our conclusion of consolidation, move higher, consolidation, move higher. When we look down here at the 6 month, you can see there is an upward trend to our commercial movement higher. Is it extreme? No, it's not, but it is higher. And you can see our large speculators, our non-commercial reportable interests, they are selling it right to them. So that's gold, again, in support of our chart conclusions as well. Heading over to crude. Here's our crude chart. Again, the top graph here is a 3-year normalized position. And blue line, I'm going to keep reminding you guys, is our commercial interests. The orange line is our large speculators and non-commercial reportables, and then the public is gray. So you can see public has been long for some time, and our commercial guys are starting to get off of zero. What I've noticed about crude, at least in the past, 2 run-ups, and it's been fairly apparent, our speculators, our large speculators, drive the price up, and when they see that there's no action behind them, they begin to sell off. And then our commercial interests are taking the other side of their trade. So this is what happened in 2015 when price ran up to about $60 a barrel, if you guys remember that, and then it dropped down to 20. And so the reason I've been short on crude, at least bearish anyway, is because of that same reason. So this is that most recent run up from, whatever crude bottomed out at, the low 30s, high 20s, back up here to about $50. And then there's nothing behind them. The speculators haven't moved, the large commercial interests haven't moved off zero. And then we've fallen down. What's interesting here is the pattern is beginning to change. The commercial interests, it looks like, got done selling into them, into our large, I'm going to call them the large specs, and now they're beginning to move a bit higher. So we could see a move higher in crude, although whether the pattern holds or not, I don't know. And that's where I say we're, the chart. I maintain a bearish, bias on crude, but we could see it otherwise. If you look here at the 6-month chart on crude, our large commercial interests, they are quite long at this point, and so there's an argument to be made on the long side for WTI, for the CL. And lastly, well, actually, I've got a couple bonuses for you guys too. Lastly, on the E-mini, the E-mini, our large commercial interests, these guys are beginning to move out of their net or their extreme short position or their extreme long position. Excuse me. And so that helps support me, when I'm looking at it from a bearish perspective. The 6-month chart, again, these are fast-moving markets, especially when we look at the financial commodities. And so I personally prefer looking at it from a 6-month, and this is exactly why I've been maintaining a short bias in the E-mini, because our large commercials, and in this case, they're dealers. They're not, productive capacity hedgers. These guys are large dealer networks, and they're short. They've been short significantly. So for me, that's part of where I derive a short bias from. So those are the ones that we look at every day, right? Copper, gold, crude, the E-mini. I'm going to pull up a couple other charts just as a bonus for you guys that help, give me some additional perspective. Here's the chart of silver, right? The whole precious metal complex, I think, is relevant, especially when we look at gold. And silver can be informative. As you can see here, our commercial interests are dead short. The shortest they've been in the past 3 years, at least from a net position standpoint. And so that's telling for silver, and you can see here on the 6-month chart, also very short. How does that portend for gold? I have found, in my mind, in my experience, silver can tend to move faster than gold can, and so that's where I feel we can see that move lower in gold sooner before it goes higher. Not last but not least. I got 2 more. I got the dollar, and then we're going to take a look at the VIX. Here's again the 3-month chart on the dollar. Blue line is our primary dealers. Orange line, levered money, and gray line is the public. And this just looks like I'm going to try and find a traffic jam and uncertainty. I was going to use a different description, but I can't really make heads or tails out of this, guys. This is kind of crazy. We're just all caught up. Everybody is. This to me screams uncertainty in the market. If we look at it from kind of a rate of change perspective, I'm going to call the public flat. I don't really see a whole lot of change, but we do see the dealer, our large dealers, coming off of an extreme long position, and now they're right back in the middle. So from a change in perspective, change of position perspective, if things continue down, we could probably see that's bearish for the dollar. You can kind of take this for what you wanted. It's more of looking at the tea leaves, seeing how that goes for you. So lastly is the VIX. And for me, the VIX has been probably some of the most telling action. Here we have the VIX here in an extreme long position, and so this is interesting for me, because if you look at, this is back in August. If you remember what happened in August in the E-mini or in the markets, we had a pretty drastic sell-off. The commercials expected to go high, and then they sell into the rally in VIX, right? They close their position and they turn it net short. Same thing here again in January or late December, right? We're starting to get off rear, and then we come right back down. So you tell me where this is headed. I personally think VIX is due for quite a bit of a spike. You know, we had a tick down. Whether or not that's meaningful, I don't know. But you know, if the pattern holds, similar to kind of the argument in crude, if the pattern holds, we're going to see a spike in VIX, and then our dealers are going to take the other side of that trade. That's just what they do, right? These are the guys who've been in business for a long time, and they are the kings of the market. So that's where they're at. That's our 3-year. I mean, the 3-year VIX is kind of an interesting look. Looking at the 6-month, you can see that they've been net long. So take it for what it is. But this to me is kind of a telling pattern. So those are our bonuses for you guys. And I'm going to be honest with you, this has been a long session. I really didn't think it was going to take this long, but we're going on, 25, 26 minutes. I don't mind doing it. I do it anyway. This is the work that I do as part of my my weekly preparation for the next week, and I figure I share it with you guys. I hope you enjoy it. Go ahead and click a subscribe. Shoot me a thumbs up. I really appreciate it. Any comments you have, I'm definitely willing to get back to you guys if you have any questions, or you feel differently about how I read the charts. Let's get it going in the comments. As long as it's constructive, it's all good. And so with that, I'm going to call it. I hope you guys have a terrific weekend, and I hope I wish you the best in the coming week. We've got a full week of trading. It's going to be a pretty radical week, and I'm looking forward to it. So take care, and I'll check you at our next daily market wrap-up.